I really hope you've enjoyed the videos that I've been sending you over the last couple of days, getting you a little bit closer to getting on the phone with your bank or lender, your credit card company, and negotiating that massive reduction in your debt so you can be 100% debt free quicker and easier and for a lot less money so that you can start building wealth in your life from being debt free and really, recreating your future for yourself and your family again. And today we're going to talk about what needs to be in the agreement that you get from your bank when you've agreed upon a settlement amount before you send money. I stress this in Debt Reduction Made Easy in the book and in the course. Never ever send a settlement payment to your bank without first getting the agreement in writing. I'll tell you a quick story. It wasn't this account, it was this account. One of the first accounts that I settled, in fact, the account before this, the first account that I'd actually reached a negotiated agreement on, wouldn't send me a settlement agreement in writing. I said, send me the agreement. And they said, oh, you're coming up on charge off. I talk about what charge off is, changing of collection agents in the course. You're coming up on charge off. I don't have time to get approval on this settlement. Just send us the payment and we'll send you the agreement afterwards. It was really hard to say no. I think that was my $39,000 account that I settled for $15,000. But when they first made the offer, they wouldn't send me the agreement. And I had to say no, which was hard. I really wanted that feather in my cap. I really wanted that first closed account to feel like this process worked, but I said no. And I'm glad I did, because before that one eventually settled for the same amount that it would have had they sent me an agreement, just the next collection agent sent me an agreement. But before that happened, I got an offer on this account. We'd been going back and forth for a long time, $76,000 account. We've been going back and forth. I finally offered 25. They said yes. And I said, send me the settlement agreement in writing. They did. We're going to talk about everything that goes in it in a second, just after I finish this story for you. Because what happened is about a month later, a different collection agent at the same company called me trying to collect on the $51,000 difference between my settlement amount and the total amount that was due. Because the collection agent who had been working for them, who left within that month after making my deal, went off to another job, who knows where, didn't record it properly. He recorded it as a payment against the balance instead of as a settlement in full. So they called me up to try and collect. And if I hadn't had this piece of paper that said, no, that was a settlement in full, not a payment on the balance, I would have still owed the $51,000 balance. It was only because I had this signed contract from them that made them forego trying to collect on the remainder. So I stress this in the Debt Reduction Made Easy video course and in the book. Never, ever send a payment to your bank on a settlement offer until you get the agreement in writing. You wouldn't buy a car, say it's $20,000 on the lot, and you go into the financer and he says, okay, give me a check. And you're like, well, where is my purchase agreement? Oh, we'll drop the agreement after you've given us the money. You wouldn't do that. You wouldn't go buy a house and go into escrow and have them say, hey, give us a check for the house, for the down payment even, and say, well, where's my purchase agreement, my deed agreement, my escrow agreement for the house? We'll do all the paperwork after you've given us the money. You wouldn't do that. You wouldn't enter into a job. You wouldn't enter into any large purchase without getting the terms in writing in advance. Why would you do it when settling out of debt? Your competitor in the business of settling debt is your bank. We've talked about you are the CEO of the corporation of you. No CEO would go into a large financial arrangement without getting the deal in writing. This is your agreement. Always get it in writing first. And here's some things that'll be in it. So you'll have, if you're working with a collection company, usually I go over this in detail in the course, but in the first 6 months of being in arrears on your debt, you'll likely be negotiating directly with the bank. And then after 6 months, they charge it off. They take it off their books. They write down the debt. They send it to a collection agency that now works for the bank. I go into a lot of detail in the course about the different types of collection agents and what you can expect from each one and what the pros and cons are of working with each different collection agent at each stage in the process. But if you are at the point where you're working with a collection agency, you'll have their name up here. I blanked out the beginning of it. It was Blank and Blank Recovery Systems, but it's their name of the agency. The name of the original creditor who you took your original loan with, they are the agency's client. I made all of my payment amounts, all of my checks to the original bank because the agency was only working on behalf of the client. I never had a situation where the agency was now my creditor, but there are those situations that I cover in the course where an agency actually buys your debt from your original creditor and they become your creditor, in which case you would be settling directly with them and paying them. There are a lot of things to be aware of, scams to be aware of when it comes to people buying your debt. I go into detail of those in the course, but today that's not what we're going over. We're going over the agreement with an agency actually working on behalf of your bank. So you'd have the name of the agency, the name of your original bank, which I would have had here, your account number, your actual credit card account number, which they might do XXXXXX and just have the last 4 digits, which is fine, but you want to make sure the account number. I had a couple of different accounts with a couple of different banks, and there was one situation once where I was negotiating to settle a particular account and made an offer, and they thought that it was on a different account for a lower balance. So obviously a higher offer on a lower balance was better for them. I'm like, no, it's this other balance. And I didn't notice that they thought that until I got the agreement in writing and saw that the other account number was on there and had to say, no, that's not what we're doing. And I had to actually cancel that agreement and start again on the proper account. So you want to have the account number, make sure your payment's going towards the right account. The date, you can see this was right after the 2008 crash, about a year later that I was dealing with the debt after my business partner died and my business went under during the crash. The total amount due, the total balance on your account, and then it says settlement offer. Look, with 3 exclamation points. Look how excited they are to send me this settlement offer. A lot of people get into the conversation of potentially reducing their debt by negotiating a lower balance due with their bank. And they have all sorts of pre-existing judgments against settling for less than the amount owed. On the course and in the book, I go in a lot of detail about how it is in the bank's best interest to take a lesser amount than the amount that is due from a borrower who is in financial distress, which so many people were after the 2008 market crash. The statistics support that most people who are in burdensome credit card debt don't get there because of poor financial habits, because of too much spending and not enough income. And you'll go on to like Quora and somebody will say, how do I get out of debt? And somebody will give an answer like, well, you shouldn't get into debt. You shouldn't spend, more than you make. Most people by far do not get into serious debt by spending more than they make. They get into serious debt because financial situations beyond their control change, like the 2008 market crash, or COVID, where 40 million people lost their job and were on unemployment for 2 years. Or we came out of COVID and interest rates went up and suddenly that credit card that you had at 10 or 12% is now 28% because it was variable rate and interest rates have gone up and they charge 5 points over prime and prime has gone up so many percentages. And now you're sending more money into the bank than you were and you were managing before, but now your positive cash flow goes to negative cash flow because more money is due to the bank than you expected. Your home loan interest goes up. Most people, statistically, that's how they get into debt. Last year in 2022, 3 out of 4 Americans, 75% of Americans were behind on their credit card payments. Not because 300 million people had bad financial habits, but because 300 million people suffered through the shutdowns of COVID, and that affected their ability to pay credit cards. So when a bank is dealing with a borrower who is in financial distress, instead of all those borrowers filing bankruptcy and the bank getting nothing returned on their loans, it's actually in their best interest to make a settlement offer to a borrower and get something back on their loan, which is why they're so excited here to put exclamation points after settlement offer, because they want to get me excited emotionally because they want me to make this payment. They want me to do this. You can see it in their language, in their bold settlement offer there, which is why I coach people on how to do this and let them know it's in your bank's best interest too. It's better than running away from your debt is to approach your bank and come up to a situation that works for everybody. So you want to have these words. See these words right here, settlement in full, or it might be full settlement of, or full release of. You want to have words to that effect in the language so that nobody can misconstrue this as a payment against the balance. Our client has agreed to accept one payment totaling $5,000 as settlement in full for monies owing on your account. Please make your check or money order payable to our client. They're telling me to make it out to the bank, which I was happy to do because I knew it was going exactly where I wanted to go, instead of making it out to the recovery agency, which takes more work on your part, more due diligence on your part to make sure that that payment is going to a collection agent who's going to pay it to the bank. I go into that in the book and in the course. Failure to make payment as scheduled will cancel this agreement and result in the entire balance becoming due. If there is a due date on your payment, make sure, well, there will be, I shouldn't say if, there will be a due date on your payment. Make sure that you get it in on time. If you send the payment after the due date, they will take that payment and apply it as a payment against the balance, and they will not call it a settlement payment. Make sure you meet any dates for payment. I just want to talk about this line briefly because it's here and you see it, that the Internal Revenue Service may require financial institutions to file Form 1099-C, cancellation of debt, to report the discharge of indebtedness of $600 or more. When a bank forgives debt, sometimes they call it debt cancellation, debt forgiveness, debt write-off, any of those words, more than $600, they report that to the IRS, and the IRS treats it as income. So in this case, my total balance was $22,000. I settled for $5,000. The canceled amount, the written off amount, is $17,000. That would go to the IRS, who would treat that $17,000 as income. A lot of people throw their hands up. Oh my God, you mean I'm just transferring my debt from the bank to the IRS? Not exactly. You don't now owe $17,000 to the IRS. You just owe taxes on that $17,000 of income. So if you were in the 15% tax bracket the year that this happened and you were filing your taxes, you would owe 15% of $17,000, another $2,500 or so to the IRS. You'd still be settling a $22,000 debt for $7,500, $5,000 to the bank and $2,500 to the IRS. But there are also several ways to not be liable for that as well. I cover it all in the course. You should talk to your accountant. There are things like the insolvency rule and applying business debt and other ways to not owe that money. They'll still report it, but for you not to have to pay debt on it. On my total cancellation, I paid taxes on some of the cancellations and not on others. So don't look at that as oh my God, my debt's just going from one place to another. It's still a massive reduction in your debt, but I talk about in much more detail in the Debt Reduction Made Easy course and book, but I wanted to point it out here just if you're seeing that sentence and have a question about it. You understand that this settlement does not completely resolve the loss that was sustained by our client, and certain restrictions may still be applied to any present or future business relationships with this or other of our companies. I say this because I had a couple of situations while I was negotiating. There was one company, a financial services company, that held a credit card and my car insurance. And they said, well, this could affect your ability to have car insurance with us. To which my answer was, hey, this is the financial situation I'm in. I need to reduce this debt dramatically in order to maintain my finances in my life. If you choose to not have me be your car insurance client after this, I understand. I'll go find car insurance someplace else. As it turned out, they didn't care. They took the settlement. It was this bank, in fact. They took the $17,000 off the settlement, took my $5,000, and I still have my car insurance with them 15 years later. Another may say, well, we won't give you a credit card in the future. That may or may not be true. I do have other banks that I settled with who, after settlement, when my credit score went back up and I applied for credit again, gave me credit cards again, and I have new credit cards with the same bank, and others that said no. So yes, as a company, if you settle debt with them, they have the right to say we will or won't do certain forms of business with you again in the future. I found most of the time that it didn't happen and didn't affect my ability to get credit or do other financial services. This part's required. The communication is from a debt collector. We're required to inform you this is an attempt to collect a debt, and any information obtained will be used for this purpose. In the Debt Reduction Made Easy book and course, I go into what's called the Federal Fair Debt Collection Practices Act, which has a long list of restrictions and requirements that debt collectors must conform to when collecting a debt. One of them is to inform you in writing that they are a debt collector. So that's why that's in there. And then I'll show you a couple of others. So there's this one that I already talked about, the $76,000 account for $25,000 that has all the same information. This would have had the original, the company's name would have been up here. I blanked it out. This would have had the original bank's name. The client reference number would have been my account number, the current balance, the settlement amount, the date that it was due that I had to make payment by. And you see the same language. This letter is to confirm that we will accept the amount indicated above as full settlement and release of your account, provided said payment is received on or before the due date. Upon clearance of your payment, we'll consider this account settled in full. Mark our records accordingly, as well as our clients' Should these terms not be met, we're going to withdraw this offer and your full balance will be due. All the same language, and this is an attempt to collect a debt. This communication is from a debt collector. Make your payment to the client listed above. List your file number in the Debt Reduction Made Easy book and course. I go into detail about how to keep your records, your correspondence, your payments, your paperwork, your files to make sure that you are fully protected against things like someone coming back and saying, we want to collect on the balance. All that I go into detail about in the Debt Reduction Made Easy method. Here's another. This is the one that originally offered me a $15,000 settlement on a different account that I had with them, a lower balance account. I thought I was offering it on this account. They thought I was offering on a different account. When it came time to make the deal, they said, no, this is on your $24,000 account. I said, I'm not paying $15,000 on a $24,000 account. I had to cancel the agreement. It went into charge off. It went to another debt collector. I said, hey, this was the miscommunication. I'm still willing to pay this on this account. And that second debt collector took it. But you can see this was, after the crash of 2008. And again, I talk often about that, paying the minimum monthly payment, it can take 10, 15, 20 years to pay off even a small balance. If you watched the video on the financial overview spreadsheet I sent a couple of days ago, that was just a $3,000 balance. It said it was going to take 22 years to pay off at the minimum monthly payment. Imagine if you have a 5, 10, 15, 20, $25,000 balance, paying it off for 20 years. I started getting into serious debt in 2007. The end of 2007 is when the subprime mortgage crisis hit. And it was spring of 2008 that the market crash hit. And my business closed. My business partner had already died. This is just 6-8 months later that I reached this agreement. So you can see how quickly you can completely eliminate debt, be debt-free through negotiating reductions in your debt with your bank compared to making that minimum monthly payment for 20 years and paying twice the amount in interest. And again, similar language. They have my account number would have been here, their name would have been here, my original bank would have been here, the total amount, the settlement offer. We're authorized to accept this payment as settlement in full, again, on the above referenced account. By completing this agreement, this company agrees to stop any further collection activity from being taken against you on this account. The settlement is contingent upon the following. I split this one into 2 payments because I didn't have all the money at once and some more was coming in on a later date. I talk a lot about structured payments and what you need to do in structured payments, and also about how to build your settlement target fund over time if you don't have it all at once, and structure that over payments in the course. But I did that here. And again, I'll stress here, make sure you make every date, because if you miss even one date, it cancels the agreement and they'll apply the payments towards your balance. Upon completion of this agreement, this company will notify our customer that you fulfilled the terms of the settlement agreement. Our customer will then update your credit report to reflect a settled account. A lot of people witness their credit score falling. Their credit score falls often due to the delinquency when you aren't making payments each month and it reports as a delinquency. That causes your credit score to fall. I talk a lot about credit scores and every effect that all of this has on your credit score in the course. And one of the things I talk about in Debt Reduction Made Easy is that if you have been delinquent, when it comes time to actually make your settlement payment and they report your account as settled instead of delinquent, it actually makes your credit score go up a little bit, which is a little bonus to settling. In addition to being debt-free, your report score goes up a little bit because it's now a different notation on your account that's better in the algorithm than delinquent. If your payment's returned for any reason or arrives after the settlement date, this offer will be considered null and void. So make those payments on time. Please consider this as notice that if payment is made by check, we'll convert the check to an electronic debit through my bank. That's all fine. And again, this language, we're acting as a debt collector. This letter is an attempt to collect this debt. They're required to say all of this. And that's it. So that's what we wanted to talk about today, is your settlement agreement and the things that need to go in it. Again, I go into way more detail in Debt Reduction Made Easy. So please go to debtreductionmadeeasy.com, pick up the book, pick up the free settlement target fund spreadsheet that comes with it, a much larger, more comprehensive version of the overview spreadsheet I sent you the other day to check out. And there's a workbook in there that you get for half price. And of course, the video course, which is amazing and will get you on your way to being 100% debt-free as soon as possible for the least money as possible. If you choose to go ahead and tackle it all yourself, I hope all of this is helping. We already gave you your goals and obstacles, setting emotional targets and tangible targets, and being prepared for everything that comes your way. We sent you that financial overview spreadsheet, and now what to do in a settlement agreement. Again, to your success, I really want you to be 100% debt free in as soon as possible for as least money as possible, and putting your income towards your life for the benefit of your future and your family. Thanks again for sharing this time with me. There'll be more coming up in the next couple of days, and I will be in touch.